Good morning, everybody. Welcome back. Let's quickly get a audio check going. Just in the chat, if the audio is good. Quickly before we begin. Just give a few minutes for everybody to come on the stream. We're going to jump right into the charts quickly before 8:30. Just want to go over a couple of things. Just have a look at the analysis here. Everything does look good. Okay, so we are looking at the US 100. Jump up into a daily chart. Just run through a quick analysis over here. On the weekly chart, we have a imbalance here. Pull that through. We also have these lows here. I marked those out on the daily. So we traded up. On Wednesday, we cleared these highs out into this daily imbalance, which coincides with that weekly fair value gap. Traded into that. On the 4-hour, we have a fair value gap here. Traded into that. Held price pretty good. Cleared these equal highs and tanked down lower. We have a breaker block here. Extend that through. And then we also have this low as well as this one over here. And this would be a daily fair value gap. Let's just look at that daily fair value gap. This gap over here, extend that through in case it wants to act as a possible inversion to send price down lower. Looking at the hourly chart, we have by the way, we also have a 4-hour fair value gap here that I just took note of, along with the breaker block and this 1-hour order block here. We're just floating inside of this right now. And then down into a 15. And that is what we are looking at over here. So let's look at dollar index. For dollar index, we have this imbalance here on a weekly chart. Looking at that, we took out these relative equal highs. We have clear equal lows below us. Get this out of the way. On the 4-hour chart, we have a inversion over here. Put it into that. Send us down lower yesterday. We also have an inversion over here, which is noteworthy to extend through in case it wants to trade through and act as a inversion. And then we have another one sitting below that one over here, which we could utilize as a potential target. Then looking at the 1 hour, we have these equal lows over here, as well as this wick, which you could take note of this wick. If you want to do that, you can do that, but it's close enough to this 4-hour fair value gap consequent encroachment, so I'm going to not take note of that for the sake of keeping the charts a bit cleaner. And then finally into the 15, which we're sitting inside of this 4-hour inversion. We're sitting out on the lower quadrant of this below the consequent encroachment. What I mean by a lower quadrant, if we just take a fib and we just pull the fib on this, you can see we are sitting at the lower quadrant over here. So I'm looking at that. Let's quickly switch the screen over to US 500. Have a look at that. Should be visualizing that on your screen now. So for US 500, I like the fact that we traded up, and I didn't note this. We have this order block sitting here. Extend that through. You can see we traded into that, moved away, came back up into this wick. You can note this wick of that candle. You can note that, extend that through, and we traded into that, and we rejected off heavily this week. We also have this gap over here that I took note of. Going on into a daily, we have this gap over here. We have this relative equal low, and I also took note of this daily week consequent encroachment. Moving into a 4-hour, we have the breaker block sitting over here, extended that through. We did take out this daily equal low in here as well. We took that out, sitting aside of another weekly fair value gap. Let's look at that gap. Didn't look at that one. This bottom one here. We did actually look at that one. And then we have these daily week and daily relative equal lows sitting below us. Moving on to the hourly chart. We have this 1-hour order block here. And by the way, this is the 4-hour fair value gap that you're seeing down there. And then finally on a 15, this is what we are looking at here. I like the fact that we traded below these daily equal lows, and the fact that we just tanked. We just dropped lower yesterday, and we didn't really take out any short-term highs. So that's something to keep in mind here. There's a lot of liquidity resting above these short-term highs. And at the same time, we have this old low resting below us that is in close proximity as well. Let's quickly look at the Dow. Look at a weekly. We have this long wick. You can draw the consequent encroachment of that. On a daily, we have this order block here. Extend that through. We traded into that. You see, we got the mean threshold of it there. just extended it more or less. So we can look at that level. We have daily equal lows below us, as well as a daily fair value gap that is resting below us. On a 4-hour chart, we have this 4-hour fair value gap, extend that through, price traded up into this, and it hung around this level. And you can see how we hugged that daily order block open price really clean over here before we took out those equal highs one last time and then tanked down. We have that same high, low, higher high, same breaker block sitting here. Take note of that. And we have daily equal lows below us, as well as a daily fair value gap here. Just take a look at these quickly. So there's that daily fair value gap, as well as the daily equal lows here. You can't miss those. Moving on to a 1 hour, we have the same order block sitting here. We also have a fair value gap here. I'm going to actually take note of this fair value gap. We can take a look at this level. Posted on a green. Take note of that. See on a 4 hour, nothing on a 4 hour there. So we'll keep that one on a 1 hour here. And then beautiful rejection on this level here. Really nice. Below that consequent encroachment. Let's extend that through anyways. Above that 4 hour breaker, we still have that 1 hour order block above us as well. Equal lows down here, visible on the screen, and then we have those daily equal lows below us there. I feel like those are quite the distance. We do have an equal low here, so let's take note of this. Just take note of that. That would suffice. That's going to be a 1 hour. 1 hour equal low, that's fine. Just give us a target that is in close proximity here between where we are now and this daily equal low. So that is a quick rundown of what we are looking at this morning. Let's go back to the NAS here. Go back to US 100 and let's keep an eye on this. I quickly want to look at the seasonal tendencies here. Let me see here. Seasonal tendencies. Okay, so for NAS for August, we have for the 5 year, we have a slight drop and then a move higher and sitting sideways until the middle of the month before we get a drop down. For your 15 year, we have a move down, and the same thing for the 24 year. We have a rally down. Looking at the dollar for the month of August, on your 5 year, we have a slight move up. And then for your 15 year, as well as 35 year plots, we have moves lower on both of those before we then start getting a rally up higher. Mm. So we got the NAS possibly possibly moving in tandem with dollar for this week. And that is something that I'm seeing this morning as well here, where we could potentially still have dollar move along with the NAS. Now, while we are waiting for the NFP release at 8:30, let's play devil's advocate, as ICT used to say, and look at this market. Like I mentioned, we have this huge rally down lower, which day of week, it's Friday today. We had a massive rally down the day before. So, massive rally the day before usually gives you a messy AM session. And coupling that with NFP, coupling that with the fact that we have equal lows in very close proximity here, not very far away. So we've got equal lows below us. We have equal highs here above us, equal lows over here. So we are sitting inside of a range. Okay, so that is low probability. Now, again, since we dropped now lower and we didn't take out any short term highs here, there's a lot of buy side liquidity resting above this. Again, that adds to that 50-50 trading environment. If I was playing devil's advocate and I was the market maker in this situation, I would probably take this market, snap it down lower for the NFP, the initial release, snap it lower, get more people to go short on this thing, and then take it off higher, taking these guys out. That's scenario number one. Scenario number two, snap it above these highs and then tank it down lower, taking out these lows, at least these lows and these ones here. And then take it up higher, clear out these highs, and close it inside the range for the week. And that clears out the board. So it's a 50-50 scenario here. This thing could go either way here. So low probability here. Let me. I do want to switch the screen back to US 500 here. We could just look at US 100 too, though. Fact that we traded on higher time frame into this daily fair value gap here as well as this weekly fair value gap here. And look at this consequent encroachment. We traded into that, we closed back below that, we moved away, we rejected that level very clearly. We also traded into this daily order block. So on a higher time frame, NAS is very clearly bearish, which again, looking at the seasonal tendency, that would line up with that seasonal tendency, and that would line up with the 15 and 24-year plots. So that will line up with that. idea. So that is ideally what you want to see in this market. Is you want to see lower prices, you want to see them take it down and eventually take out these lows over here. That would be ideal. That'd be perfect if they do that. But then again, we have this scenario here where they have not taken out any short-term highs. So if you come into this and any other day, if it was any other day, just a normal trading day with some normal news release at 8:30. If you come into this, you're 50-50. So you're going to have to sit and wait here for them to take out one or the other side, get a clear direction, and then trade it into the other way. Meaning, if they take out the lows first, then I'm going to want to see a move up higher to take out these highs as well as these relative equal highs here to go and get those guys up there. Now, that would be a trade that would be against your higher time frame analysis as well as against your seasonal tendency, right? So if you do get that move where they take those stops, you're going to be trading against higher time frame liquidity. So ideally, you are gonna go into that position and you would be taking a lower risk on that trade. If, for example, we trade up higher, we take out these highs, then drop down lower, that would be something that would be in line with that seasonal tendency. It would be in line with the higher time frame. So that is a higher probability trading setup. So that would be the ideal scenario. But since it's Friday again, time of week or day of week, we're probably going to get a retracement up higher here. I don't think we're going to get much of a move now lower anymore. We're going to trade back into this range, take these guys out. They might really just give them one last push down lower to get these guys involved here, get them thinking it's going to go short, get them trapped in a short, and then just come back up above these highs and take out their stops. Since it is Friday. So in this market here, I do not have a clear directional bias in this. This is 50-50 here until we clear out one side or the other one. Because we are sitting in a range here. So not much one-sidedness here. We want to go down into a 5 and lower time frames so we can just see what is happening down there. See, we have these equal highs here again, very clearly. Relative equal highs, lots of liquidity above us here. And then we have this liquidity below us here too. So we are just sitting sideways here, sitting at that 1 hour order block. We look at the 1 minute, you can see this is a sideways market. Since this morning, we have been sitting sideways. No clear direction here. We have relative equal lows here, relative equal lows down here as well. And then we have relative equal highs. And we have relative equal highs here, here, and up here as well. Equal highs. The same ones we were looking at on a 15, 829. Okay, let's sit on the 1 minute. see what they do here. Wait for that release to come out. Almost coming out. Dollar is just sitting sideways as well here. There we go. There's that spike down lower. Trading down lower. They did clear out these little short-term highs here, these equal highs. NAS is not doing much. US 500 is, there we go. Catching up now. There we go. Take it up to 15. See that? Reaching for that 4-hour low. There we go. Rejected that 1-hour order block really, really nicely. Seems like dollar is rallying along here. US 30 took out its 1-hour equal low and it tapped into its daily equal low. There's your 4-hour equal old low there. Tapped into that right now. Look at how nicely we closed there after taking out these highs here. So that's why it's, when it's low probability like this, where you have equal highs and equal lows on both sides of the market, just wait. Just wait. Wait until they clear one or the other side. And then start looking for one-sidedness. You got to find one-sidedness. If there's not one-sidedness, then it's low probability. US 500 is yet to take out the wick, daily wick consequent encroachment. To just quickly show you guys that one, US 500. Oh, it's not going to show it on this one. I have to switch it. I do want to show you guys. So let me quickly switch that over. US 500. See, it's yet to take out that daily wick consequent encroachment. I can show you US 30. Well, we are at that. US 30 took its daily equal low. Stayed inside that 1 hour. Fair value gap here. Really nice. Back over to the US 100. Still rallying, pushing lower. There we go. Pushing off lower still. So this is nice. So they're inducing here. A lot of people are going to go short here. A lot of retails are going to go short in this. And dollar index is, I don't know if I showed the dollar or not, but here we go. Dollar index cleared its daily equal lows. Really, really nice. We had that target. I had that one sitting on the chart for quite a while. And it was reluctant to trade down lower into that. But there we go. It's taking it now. So this is ideal, getting people induced to take a short, going for that daily. We have a, that is another 4-hour old low here. Daily wick consequent encroachment on US 500. Really, really nice move. Getting people to go short. Let me just pull these back a little bit so we can visualize them on a lower time frame. Really, really nice. So when this move is all said and done, we could look for a setup higher to take out these highs and then possibly even these highs if the setup does form, because then that would then be one-sidedness. That would fall into place with the classic Friday close it off back inside of the weekly range. Although it would be against the seasonal tendency as well as the daily higher time frame directional bias that we came to. Just look at a 1 hour to see higher time frames. Not much to see there. 4 hour chart. We're still pushing now lower here. US 500 is reaching for that daily wick. We're definitely going to take out this low as well here. US 500 is about to take its low. It's daily wick, consequent encroachment. Let's switch over into that quickly. US 500. See, there's that. NAS is about to take that 4 hour low as well. And there's that 4 hour low. There's that. Taken out. So really, really nice last push down lower. Dollar index is it's holding this daily equal low. It's holding that level so far, pushed away from that level. Now, since we have this massive imbalance here, we do have a higher time frame level, which is the 4 hour low. We could get retracements back into this. And then from this area, we could see something up into these highs. Look, classic liquidity voids, and then we trade up higher into these liquidity voids. Dollar index is still rallying higher, really rejecting this equal low, moving up higher. I'm not really expecting dollar to, I'm not looking at dollar like I would on a normal day where dollar would be trading against the indices, just because we have that seasonal tendency where dollar just trades along with future markets. So I just am not really looking at dollar. I'm just not expecting it to be trading against future markets. So by looking at the seasonal tendency, I know that dollar has a possibility to be trading along with future markets. So I'm not expecting it to trade against them, which normally that would be something that you would be looking at because that would give you a lower probability trading scenario. So you're just anticipating it now by looking at that. So far, we have US 500 trading. I'm going to show it over here. It's trading against. It's okay. It's still trading along with us here. Yeah, let me refresh that page. Gotta refresh that page. There we go. Okay, that's better. For some reason, TradingView sometimes hits a snag and I have to refresh one of my pages. It's kind of annoying when that happens though. So going off lower here. You look at these highs and you look at dollar, look at these higher highs and the reaction off lower. I feel like this is suspect. It's trading into this imbalance. Probably going to push it down lower. US 100 didn't make a higher high. US 500. Wouldn't see that as a higher high here because we didn't really go above this. We just barely almost went into this imbalance here. What about US 30? Also no higher high, so that might be an SMT with dollar index, where dollar index was trading up higher just to take out that high and trade into that imbalance and push down lower. And that is also something that you would not expect because usually dollar would just be trading in line, would be trading against, not in line. But now since we are trading along, I'm looking at it to make these signatures. Like give us a higher high and that might be suspect and trade down lower. Where normally you would be looking at the lows here. No, not in this case. So for nothing here, it's 842. Not much to see. We have now taken these higher time frame levels. We now have these here. So we did trade into a higher time frame level. Of course, it's 843, so there's not much you can do over here other than wait. Look at 850, 850 to 910. That's could give you a possible trading scenario. If not, you're gonna look at the 930 opening. So 920 up to about 940. Look at that macro. And if nothing there, then of course you're gonna look at the 950 to 1010 macro, which then you would fall in line with the silver bullet. And then you could also look at the 1050 to 1110 macro. It's not doing much over here now. Nothing yet. US 500. Just go over to US 500 here. Not much to see. Basically trading the same. US 30. Basically the same thing. They want to get into this liquidity void. Trade up higher into that liquidity void. I want to look at, let's look at this. We have a fair value gap here. Let's look at this fair value gap here. You see what it does. Long. Let's just look at this. They breed this fair value gap. We do have this low here, high, lower, low. Scenario, we took out liquidity. Wouldn't really see that as a, I don't know. I wouldn't count that as a high probability break block. I don't know. We haven't traded above these three down candles here. That would give us a order block. We've not yet traded above this. We haven't closed above it yet. We do have some equal highs here. Anyway, if you were in this situation, then the stop would be below this order block here. And then you could, let's say let's say you were targeting 1 to 2. So that would probably be how you would frame that setup. Like a 1 to 2. Let's look at US 500. Also inside that fair value gap. Just see how they trade around that consequent encroachment. US 500. No real reaction here. Remember, this is not inside of the macro. 947, 48. Gonna wait for 950, 850, not 950, 850, 850, and look at that. Nice reaction. The dollar index now seems to be still trading now lower here, which that is good. We would want to see dollar trading off now lower. What is Dow doing? Dow is trading higher. So far looking good. Taking these equal highs. Looking good. Looks good so far. This order block would now be confirmed. Would now be a valid order block here. It would also have these down candles. So look at that, and also look at this fair value gap in here to see if they want to trade back into that, and then take it off higher. About 14. That'll be about 5 handles here. Yeah, that's about 5 handles. 12% is about 5 handles. Right above this high. So that would be a partial probably. 5 handle traders. That would be a partial. Take that as a partial point. Your 5 handles. Let's make it green. 5 handles. 5 handles and then stop to break even. Still trading really good. We have another fair value gap if this candle closes. Trading into this liquidity void. Dollar is dropping. Everything else is still trading up higher. So that's good. Looks good so far still. Seems like ES is still trading higher as well. I would almost be the target hit there. So I would take something off. Take something off right there. Bam. And move the stop to move the stop in profits and cover your fees and commissions. We have this fair value gap here. Look at that. We can move this over. So we did take that entry there, so let's leave that there. Just bring this in. It is now inside this liquidity void. So that looks good. We have another fair value gap here, so that we would be looking at this one as well. Look to see if we get a reaction from this. So that will be already be 5 handles banked above this high there. From where we took that entry. That will be 14%. So that would be about 6 handles already. So if you're looking for 5 handles, you would be done. Look at this fair value gap here and look at this one. At this point, you wouldn't care about losing anything because you would have a stop in break even, covering your fees and commissions here. You took a partial here, another partial above that high. So even if you do get stopped out in this one, it wouldn't matter. Dollar is still tanking down. US 500 is still trading up higher. Also trading down lower now, these last 3 minutes. US 30 following along, so everything looks to be in sync. Let's look at this fair value gap. See if it gives us any support here. So it's nice this morning that we play devil's advocate and we got this scenario where we got that rejection now. Look if that wants to go higher. See if we get this candle to close up higher. We had this 50-50 environment and they took out the sell side liquidity. See if this will act as a possible inversion. We also have this order block. That would be an order block. Okay, so there we go. That would be your take profit hit on that position hypothetically. If you were studying that entry on this fair value gap here, That would be your take profit hit. So that would be where you would take your money off and you get out of this position, because keep in mind that the seasonal tendency as well as higher time frame still suggested that we are bearish. So you don't want to be going in here expecting massive rallies higher. We traded up into the daily's the best here. Traded up into that daily imbalance and we tanked down lower. So keep that in mind. You're not going to be expecting massive runs higher. This is high resistance liquidity run. We did, however, get a nice run up higher from this fair value gap here. And this was, even though it's at 847, I would still consider that one to be a part of that 950 macro. They gave that spool and pushed price higher. So look at this order block here. I should probably color this one different. Orange. See if it wants to push higher though. Not expecting much here though. We could be going sideways. Show you guys dollar index. Really dropping off. Really, really nice. Really clean. US 500. US 30. Let's watch this fair value gap. Still follows along with this consequent encroach, this mean threshold of this order block. So watch that level there. Let's see if we get any support. I think we can get rid of some of these other levels here. Keep things a bit cleaner. Still want to keep this one on the charts. So that's not something that I do want to see here. If it wanted to reject this level, it would have rejected it by now. See if we can get a candle close above that there. We did close above that consequent encroachment though, but it's not looking good. Looks like it wants to go into this lower fair value gap one more time. Could also clear this off here because we did hit that take profits. This could also be all that they give to the upside. Maybe they want to take it down below these lows one more time. That's just where You have to keep in mind again that the higher time frames still suggested bullish, bearish prices, not bullish. So that's something you have to keep in mind. Let's now get a close above this imbalance. This would then, this would be an inversion now since we traded below that and back above it again. Okay, nice move through that inversion. We do want to see a close above that. Beautiful push through that level. We're just sitting sideways here though as well. Not moving anywhere fast. Notice that we have this low and this low here, higher low. If we look at the US 500, we had a lower low. Same thing on US 30. Something to keep in mind. Okay, we traded up here close below this, so that is not something you would want to see if you are in a long. It's reluctant to go higher. Rejected this small little gap in here. I'll quickly take note of that gap. Make that gap orange. So we rejected that one. We closed above this one, traded into this one more time. It's tanking off lower. See if we can get a close below this one here. We can get a close below this fair value gap. That would be an inversion. We could look for lower prices. Look at the US 500 here. Trade into that fair value gap here. High, low, higher, high, breaker block. Really cleaner structure, I want to say, than the US 100. Also on that same high, low, higher, high here. So that breaker block there. Let's look at this breaker block. Keeping it in orange. Breaker block. Could possibly be setting up a short position. Really depends on how they trade around these levels here. So this again would be that breaker block. Really messy order block here. Look at the candle bodies here. We have these candle bodies here. Notice these candle bodies are lower than this, even though the wicks are trading higher. Notice on US 100, the candle bodies are actually higher than these ones here. On US 30, take note that again, candle bodies are lower. They're inside of this fair value gap essentially, as well as this order block here. So look at your candle bodies. So that to me indicates lower prices. This was just a stop hunt higher. Fit it into that fair value gap, tank down lower. See if we can get a trade up into this inversion slash breaker block. And see if we can utilize that as a second distribution. Because that would be your first entry to go short if you were looking for shorts in fair value gap. See if we can catch that second distribution on this one. So fair value gap here. Put it into that fair value gap. Again, this is not in macro time, so not something that you would be looking to trade, but you're studying this, looking how price reacts. Let's extend this, see if we can get that inverted. So there would be that trade back into that level there, acting as an inversion. See if it wants to push up into this breaker block. I highly doubt it though. Also have a fair value gap in here. Again, I'm not going to note all of these. It's going to keep the charts really messy. But we acknowledge them. It's trading up into this breaker block. Now, this could also just be a move, a retrace back into this, and then it could ultimately push up above this and reach for those highs. Gotta be mindful. That's why it's not in a macro here. We're just studying price. That's why I'm really cautious with taking a short over here, just because we still have those equal highs above us as well, even though the higher time frame suggests bearish prices. Gotta be really careful here. So we did get a rejection. So let's watch price. Continue watching price. Let's see if this breaker block will be respected. I don't want to say that this is one that I want to tape read because it's not inside of that macro. So let's just watch price and see if it's going to respect that. And for the sake of hypothetical sake, breaker block, that would be your order block. You would have inversion. So the stop would be up there. And the take profit, if you want to go one to two, you're gonna go 24%. So that's gonna be a take profit around about there. Gotta be very cautious in this one though. Really, really cautious here. That's why I'm just watching price for this one. It's really a tricky environment to be in over here. If you notice that you are in a tricky environment, it's a good idea to just wait. Give it time. Wait till it clears up. So we're trading with dollar at the moment. Dollar is trading in tandem here. US 500, just wanted to show you that chart. See that? US 30 sitting in a consolidation now. Gotta be very cautious here. I think we're just gonna keep on trading higher here. We're not gonna get that set up down lower. So now we have traded above this, which now would be an inversion. This would be inverted as well. Already reject that. Put it into it. Becomes quite messy. When you start getting experienced and you do this stuff for long enough, then you're not going to be looking at all these levels. You're not going to mark each one of these levels, obviously. You're going to look at the ones that are salient, and you're not going to mark all of them up. You're going to look at them, you know they're there, and you just watch them. I actually want to say, let's get rid of this one here. Keep this one on here. Could still come back into this one, though. Even though we did trade that consequent encroachment and we did tap into the high. I have to look at how they close here. They close above this one, above that consequent encroachment, then we're not going to go back and anticipate it going back into this one here. 909. Remember, we're stuck between two over here. Two of these imbalances. We did get that closed there, but notice how we see how we still rejected that one. Really messy price action so far this morning as well. If hypothetically you did take this one here, maybe this entry here in this inversion. Let's look at the high of that. Then you have this fair value gap. You got the inversion, obviously, as well as this lower fair value gap, which that's like 22%. So it's quite a hefty stop. We could also look at the inversion, this small little fair value gap, which we did trade into here, as well as this fair value gap. You could take a stop below this one, which is 11%. And then you would be looking for 22, which would be above this high. Relative equal highs here. It's just not clean price action here. Not clean at all. A lot of times the 850 to 910, it's really messy and it likes to consolidate. So it's not a period in time where or a macro that I like to trade. I like to usually do the 830 and then go on to 930. Look at that. The 850 to 910 is just not one that I really like to look at. So if it wants to go higher here, since it rejected this inversion over here now, should be reaching for that high. Dollar is trading now lower. US 30 is higher. So all the indices are reaching up higher. So far, that's looking good. We're reaching above that high, that 22%. Would be reaching for that. And the hypothetical stop would have been would be there. Would be down there below this fair value gap. Gives you 3 PD arrays. Would be a good idea to, since we had manipulation up here, probably be a good idea to take something off above this high. And then go for the 22%. Hypothetically. Just studying this anyways. Looking how it reacts. So far, if you look at price action, you just zoom out here, just get on to see that we're retracing to fill in this liquidity void. Remember, I said that if we trade out lower like this and we get a liquidity void like that, it's usually going to be a pretty messy move. And we're probably going to look to trade back into this liquidity void. And that's where that initial idea where we had this fair value gap here, coupled with this low high, lower low, although that's not the cleanest breaker block, coupled with the order block that we didn't really trade above that. until here. This fair value gap here with that run higher, that would be the nice little scalp that you would be looking to take on a long. And once you trade into that imbalance, that liquidity void, it's a one and done. You whatever you make, you take that home and you get out the trade. It's not a sit in it. It's gonna keep on rallying higher. It's something you get in, make your bank, and you get out of it. So we did. Okay, we're yet to clear the high. We did already clear the high on US 500, as we can see over here. It seems like we also did on Dow. Dow has almost now filled this liquidity void. It's like this morning since NFP release, it's NASA's been the sixth sister here, and it's been following along slightly behind US 500. But there we go. There's that run higher. That would be switch to NAS. That would be 22% about now. It's already 27%. So that would be something that if you took that, then that would have panned out. You would have had a partial above this high, and you would have had to take profit there. Really high resistance liquidity run though. If you look at this move down here though, where we get that propulsion move above the breaker block, above the order block, we get that propulsion move, then we get that move back down into what would be coupled with the order block as well as this fair value gap and the breaker block here. That could be a potential entry for a setup as well. Some of you might be looking at that one. And that will be something that if you took that, then you have the breaker block, fair value gap, order blocks. The stop would be below here for a 22%, which is quite a hefty stop. And then you're gonna have to look at taking, if you want to be 1 to 2, you're gonna be looking at a 44. So we're gonna be looking at right there, right almost above this high. And you really had to sit in this one to get above that high. That would be about 11 minutes. And it's not no fast price action. It's really back and forth, a lot of patience, high resistance liquidity run to get into that and to have your take profit hit. Something you could do is, as we trade off higher here, you could pull that stop in and you could look at taking something off at 22%, right around this level. You could look at taking a 1 to 1, pay yourself something, bring that stop into profits, and cover your fees and commissions, which takes some risk off the board. And then you could have another runner, which you could wait for that 44%, giving you that 1 to 2. And it just really depends on how you feel comfortable doing that. Hopefully that does not confuse you guys, by the way. Just in case it did, it looks something like this where you have the stop below here and you would have that take profit. Take profit be at 44, be right there. So it will look something like that. Something like that there. And then you could look at, yeah, that's about a 1.9. It'll be a 1.2 about, anyways. 1.2 just about. If you do take the 22%, see, that becomes a 1 to 1. Take a partial, take it to even, and then go for that 44%. Go for that 1 to 2. Have less risk on the board just because you are trading against the higher time frames. $9.20. We still have lots on the board here above us here. We still have equal highs above us here. A lot of equal highs. And we still have yet to take out anything since yesterday. Let's get rid of this stuff. Clean things up a bit here. Look at the higher time frames here. Not a lot to see. I'm looking at this fair value gap here. That's a 50. Let's see if I can find something on a 5. We do have this order block here on the 5. Couple that with this fair value gap. We have 5-minute fair value gap. I'm going to leave this 15-minute fair value gap on here. Change the color, keep it a simple gray. Yeah, just move it over. Go back down into that 1 minute. 9:20. We do have that candle there. We can look at that candle. Just keep that one in mind. See, look how it reacts. Would be ideal if we get below this and trade into this and then send it off higher. But we do have this 1 minute order block. We'll keep that in mind. Seems to be respecting this one though. We'll see what the 9:30 opening brings to the table. US 500, not much to see. US 30, again, not too much to see. Dollar index, still drooping off lower, I could say. But nonetheless, still going down lower. Just pull it. Okay, that's fine. That's good. We're still sitting below this 15-minute consequent encroachment of this fair value gap here. Still sitting sideways here now. If you would take this order block here, you would be looking at a stop below this 5-minute fair value gap, which on a 1 minute, you're going to have to put a stop over here below this fair value gap. Or a different trader might be might be wanting to see price come into this, as well as this was a 5-minute order block. This could also act as a breaker block here on the 1 minute. So that's nice to see. Personally, I would wait for this idea. Wait for that breaker block. Gonna make the breaker block green. So that's the breaker block. And just breaker block. So I would look at this breaker block. That's what I would want to see. I would want to see it come into this higher time frame. 5-minute fair value gap breaker, 5-minute order block, 1-minute breaker block, by the way. Right over here on the screen. If, for example, we took this breaker block, you have fair value gap, and we have breaker block, which is really, really hefty here, coupled with this 5-minute fair value gap here. We could look at this inversion here. Yeah, we could look at this inversion here. To tighten that stop a little bit, we can look at this inversion here, or you have the option of using this order block. You have that as well. Placing a stop below that, about 13%. You're gonna be going for at least 20 something, 27 or something, so like that, for a take profit. Let's see if this rejects. How does it react at this level? We're inside that breaker block, 5-minute fair value gap, 5-minute order block. Let's see how we react around these levels. So this is the scenario that I would wait for. I wouldn't take an entry up here. It's in too much of a premium. Just to go back up here, we have this whole string of order blocks here. And on 15, we have this fair value gap here. Look at how we rejected that, though. We really rejected off of that. Keep in mind that higher time frames did still suggest lower prices. So that's something that has to stay in the back of your mind, like this whole time. Same thing on the US 30. We actually traded back into that 1 hour fair value gap. And we have it looking like we're rejecting that. On dollar index, we are still tanking now lower here. Let's just go back onto a 1 minute. Okay, so that would be the entry. Since I saw that there, I'm just going to take it there. But that would be the rejection of that breaker block. And the stop would be below there and take profit. Let's just go 1 to 2. Squeeze that up a little bit. 1 to 2, way up here. Nice rejection though. So that's the scenario that I would wait for. We wait for that scenario. We took the entry there. So that's 5 handles. 5 handles right there. So ideally, if you're a 5 handle trader, then that's where you would just get in, get out, take your money, be done with it. Okay? 5 minute, 5 handles. Get in, get out, be done with it. Right there. It's really quick to just grab 5 handles, get in, get out. Let's see, 5 handles. It'll be right there. So let's say right there, 5 handles. You're just like, give me my 5 handles. I'll take it. Equal high there. So that's 5 handles done. So what I would do then, 5 handles done. Tighten that stop. Because I didn't catch the best entry. You're not gonna get that real sniper entry all the time. Sometimes you're gonna get an entry that's like this one, because I was looking at higher time frames and looking at dollar here, looking what's going on around us. But that's fine. That does not invalidate your position. As long as you're just not chasing price. Never look at this and then wait for it to be up here and then, oh, it's a breaker block. I gotta take the entry. You've already missed the position by then. And if you're scared to get in, then that's something that you practice on your forward testing as well as your tape reading, and you really start to practice that on. We're going into 9:30 here. So we want to see it ideally push higher off this. But keeping that in mind, that means we could still see the stop. So just take it to cover fees and commissions. If you get stopped out, you get stopped out. Five handles is in the bank. Better to just take it to the bank than take a stop on this here. But you really start to hammer on looking at live price action and practicing entries when you start to get to the especially to the demo phase. Look at how we rejected that there. If we get a rejection close off higher, then it's just going to keep on rallying up higher. Keeping in mind that we do have a relative equal high here. Although US 500 is not posting that high, it's giving us lower closes here. See that moving off with lower highs. Not ideal. Same thing on US 30. So that is how I would look at managing that position. If you took that 9:30 could bring something to the table. It's your market open, so be aware of that. We already moved into our direction, so that is where you're going to be cautious. You don't want to be in a position where you banked took five handles off the table and have that stop open, especially when you know that 9:30 could bring something to the table. The only time that I would not be worried about 9:30 would be when, for instance, we traded out lower and this is at 9:30. We trade out lower, taps into it. Then I would expect 9:30 to give us this push higher. We're still inside this breaker here. I would not I would not take a re-entry on that. Even if it does reject that, I wouldn't go back along again. We're likely to push lower here, and we have a high, low, higher high. Traded into that breaker here. I don't like the price action on US 500 right now and US 30, where we have lower highs, and see how we trade into the breaker block over here. So I just don't like that. It's not in line. Look at how US 30 just tanked below these lows, grab those lows. So I just don't like that. So that most likely is going to give us respect to this breaker block, trade down lower. But anyway, you will really drill on entries when you get to especially the demo part. You're really going to drill on entries in that part. See how we had all this crappy price action and 9:30 open. Look at how we are rallying right now. We had high, low, higher, high. We are sitting inside of a 15-minute fair value gap, higher time frame. Higher time frames are indicated bearish prices, seasonal tendency, bearish price action, and that's what happens. That's what happens. Let's just mark this one up. Something that you would put in your journal. Breaker block. In this one we did not get a propulsion move below that. And I would not count this move, this spike. I wouldn't look at that as a propulsion move below that. I want to see a candle closing down here, trade back to that, and then reject and bam off lower. So breaker block, we have a fair value gap here, order block. Stop would probably be up here, 20%, 40%. 1 to 2 would be here, targeting this low. So that would be that setup. Okay, so multiple setups can be framed. We had this idea here of this liquidity void. We wanted to see price trade into that. It traded into that. We had this fair value gap idea down here to trade higher. We also had this idea here to go up higher. We were looking at this idea here to go up higher. 5 handles could have been carved out here. And then we had this breaker block coupled with this higher time frame PDA right here. Trade down lower. And you could have easily carved out let's see here. This would be about 10 handles here. 40%. You're looking at 5 handles is around about 5 handles is 12%. 24% just about. Hold on. Gonna be more than just 10 handles here. 12 for about 6 handles. About 24 for more than 10 handles. So this is more than 10 handles here. So that is not a bad move down at all. We're just sitting inside of a consolidation here. Back inside that same order block level. I doubt that they're going to push it down way, way lower here. We have a lot of liquidity above us. Still equal highs in here as well. So really cautious here. Really, really cautious. Really tricky day. I was still looking at that there. So 20 handles, 20, not 20 handles, 20% would be 10 handles. So 40%, 20 handles. Don't know if I'm quite right about that one. 931. Do, 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 do. Yeah, it might not be 20 handles, but it might be, it probably is 20 handles. Could be a little bit less, but very close. Because just because NAS or US 100 moves a lot more than US 500 or ES. They're sitting sideways now here. But the point that I wanted to bring over here is that there would be a couple of different ways to form different types of setups, going long, going short. And all of those different types of traders would still have taken something home, scalping this market. We took those equal highs now. All those guys would still be taking something home. You could be taking something home by longing that from this fair value gap. You could have taken something home by getting an entry here back at the break block or block, longing this setup, looking for prices to go higher into this liquidity void. You could have been looking for a short idea inside this 15-minute fair value gap. Price hit consequent encroachment, hit it again, tanked off lower, high, low, higher, high, breaker block, wait for it to close below that breaker block, reject that breaker block, 5-minute fair value gap, snag that, and that's your entry to go short on that position targeting this low here. And that trader would still have made money. So there are multiple ways of looking at things, and everybody's going to look at things differently. You're going to have, let's, as an example, say you have four traders sitting in a room, and trader one and two could be looking for, trader one could be looking for a long into this, and he could be taking this setup. Trader number two could be waiting for the propulsion move, and he could be waiting for this retrace back, looking for this move to go up higher into this liquidity void. Trader number three could be waiting for this entry down here off of this breaker block to take a long here and to grab his five handles and get out of there. Trader number four could be looking at this 15 fair value gap, couple that with this high, low, higher, high. He could be looking at that breaker block 930, looking forward to grab his five handles out of this. And all of them would be going home and they would all have made a chunk of money. So there are different ways to look at these things. And there are different PD arrays to look at as well. That's why I say that you have to look at these things and you're going to take home, you're going to make it your own. Make it your own, and you have to add your twist to these marketplaces. And when you're trading and when you're learning, it is a lonely road to walk. You're not going to be walking this road with people holding your hand. You are going into this, it's you, it's your journal, it's the charts. You're studying, you're taking your notes, and it's a journey that you do on your time. You're not going to be comparing your journey to somebody else's journey. You're taking your journey and you're doing it at your pace. You're not going to have the same pace as trader A, B, and as trader B, C, and D. You are going to have a different pace. See how we traded into this fair value gap? Look at that, send price higher. Just go up into higher time frames here. See how we did now. Take this high as well. Could still be looking for it to go above. We still have equal highs here as well. We did take out all these ones though. So that is something that you will still be looking for. Look at that fair value gap to push it up higher. We can get rid of all this stuff now. We don't have to look at all this. Get rid of this. Get rid of that 1 hour order block. This is still, we can keep that in here still. Look at this to send it off higher. So now that we have taken out this high here, these relative equal highs. So we have taken some buy side here, but I suspect that they still would want to take this thing up to these equal highs. That could happen during PM session before the end of the day. We're now almost in 950 here as well. Look at that fair value gap. We have another fair value gap here. We have a balanced price range here. One fair value gap that is overlapping with another one. BPR. I like this structure as well. And ICT talked about this structure here as well. We have a breaker block here. Breaker block. Fair value gap is getting respected. Let's see if we can get a trade off higher in this. Let's prove it. Let's say a hypothetical example. Let's say the long was taken there as a hypothetical example. And let's say you're at least going to target this high. If not, into that fair value gap up here. Stop for this one would be tricky because we have a break block fair value gap down here. Stop would have to be down here somewhere. So you would be looking at a bigger stop. This is scenario A. Scenario B would be breaker block, fair value gap over here. Wait for that to trade into this 950. And then take a long, take it higher. But then you face the potential of they could possibly run without you, and then you would miss that position. Although if you took this one, then that would be a stop on that position. Okay, so that's a stop on that one. Unless you would be willing to, let's say you have fair value gap, unless you really want to put the stop below that breaker block there. Which in this case, if that was the case, then you would just exit it now because we're still pushing out lower on that one heavily. So that's a couple of different ideas as well for you. You're sometimes going to get these scenarios where you are going to have one potential setup that's in play, but then you would have, for instance, this breaker block that would also be in play. And you might want to wait for one setup, as per example, the breaker block, and you don't want to take this entry up here, but you want to wait for that breaker block. And then there might be a possibility that they hit this and they might reject that privilege gap and they might just send it off higher. And that would be a move that you would just miss. You would just not be involved in that move at all. And there are going to be times like that where you want to wait for something specific and they are going to run without you. And it's just one of those things, honestly. It's gonna happen irregardless. It's always better to wait for that preferred setup, that preferred entry that you want to take, even if that means you're gonna miss, you might miss that opportunity. It's still better to just be patient and wait for the setup that you feel confident in. Okay, so that breaker block now has been oops has been invalidated. And this is something that I love about breaker blocks. That we can still keep that on the chart. Really something I love about breaker block is when you got your breaker blocks and you got them coupled with fair value gaps and order blocks. In this case, we only have the breaker block coupled with this, which was a fair value gap. Usually, price will reject the breaker block. Okay, it's going to trade into that break block, fair value gap slash order block. It's going to have a propulsion move higher. Might not have a propulsion move higher, but m- more times than not, it does have a propulsion move higher. It's really going to come down to preference, whether you are going to want to see that propulsion move or whether you're going to feel comfortable taking that entry that might not have that propulsion move. And in this case, if you look at this structure here, then see that we just one solid candle, bam, into the breaker block. No rejection. No rejection at all. Second candle, no rejection. Third candle, traded through it, no rejection. If it's gonna want to reject here, it's gonna want to reject when as soon as it hits it, it's gonna want to reject that breaker block. That's one thing I really like about breaker blocks is it's gonna give you that rejection. If it's not rejecting it, then chances are it's likely not gonna trade higher. Fair value gap here, by the way. Look at that inversion. So looking at that inversion here, if you take that inversion trade, then you could take that down into this balanced price range. Look at consequent encroachment of that. See how we are moving quite a lot here, 40%. So that is just ridiculous for the stop. Stop would be above here. So that's 20%, 40% in there. And that might be your niche. You might be looking at trading inversions. Trade into the inversion, it's coupled here with a fair value gap plus a breaker block with that inversion. And trade it down into this low. Five handles. Five handles would be you would already have banked five handles, 15%. And the stop would then be at even. It's a good, really good rule of thumb. Those of you that have been taking your notes would have picked this up already. It's a really good rule of thumb. After five handles, take a partial. And if you're not going to take the partial, then consider to then at least move your stop into a profit. Okay, put your stop where your commissions and your fees would be covered. That even if it does come back and it does give you a stop, that you would not lose anything. So that your fees and commissions would be covered. So that inversion idea would have hit its take profit there. Just so that we can visualize this. Let's say you waited for that rejection. You took an entry at that candle or at this candle, or maybe you even took the later entry. It doesn't matter. Okay, that rejection took the entry. The stop is gonna be at the top of the inversion, coupled with fair value gap. We have another fair value gap here. Okay, so that's a balanced price range. Order block. Stop is there, covers three PD arrays. Okay, we also have 15-minute fair value gap. Consequent encroachment of that, we're below that. Okay, nice target is mean threshold of the balanced price range. And that gives you, it's about a 1.5. Okay, so that 1.5, it's not a bad trade. If you took the 15% or 12% for about six handles, Then six handles right there. Stop comes right down. You wouldn't have gotten stopped during this. You still would have made the full run. Okay, you could target the consequent encroachment. You could target the low if you wanted, or you could be looking for 2% exactly from the entry. All up to you. It really depends on how you look at this stuff. Again, you're gonna have to bring in your own ideas into this. Since we are sitting in these levels inside of a consolidation, even if it trades down to that consequent encroachment, it's a wonderful idea to take whatever you made, bank it, take it home, close the charts, and be done for the day. You do not have to get in here and sit through, just sift through the time frames, sift through the different pairs here. Dollar index still tanking off over here. I didn't want to take a look at dollar trading now, where it wanted to go to. Down into lows here. Looking down, it's looking to target this low couple of that fair value gap here. Could pull through this inversion here. We're just traded below that now. So that's something you could pull through. It might trade back up into that on a lower time frame and send it off now lower. But we're targeting this low here. Targeting March's daily whole low. So there's that level right there, and we just make it a red. There's that level. Let's just cycle through the rest. Yes. Let me just hold on for one moment here. Let me just see something here. Oh yeah. Okay, we'll cycle to that. Let's just cycle over to it so we can look at the levels here properly. There we go. Should be visualizing it now. So there's US 500. Let's jump into a higher time frame. Looking at US 500, see how we did not take any real highs here. We took no highs. So no buy side liquidity was taken here. So really bearish. Really, really bearish. On a 15, again, you could mark this out. On a 5, you might have been looking at this fair value gap at the time. On a 1 minute, see that? Nice little setup here coming into play. They also had a nice break block, 928, high, low, higher, high. Nice break block, tanking it off. Through that low. We're sitting sideways, guys. And this again comes back to what I mentioned this morning. And I said that when we have a large range day, usually AM session is going to be a messy AM session. Okay. It's going to be a high resistance liquidity run. You're not going to be expecting much from that AM session. So PM session would be cleaner in that case. So I suspect the AM is gonna be a pretty messy session. So far, we have been basically jobbing since 8 a.m., 9:30 opening. It's been up and down chop, nothing clean. We could see silver bullet come in, and that could potentially clean things up from 10 to 11. If that does not clean things up, then I expect PM session is gonna get things cleaned up, and they're gonna push it up. They will push it up into this range just to end the day off, and to take out everybody that was in a short position. They're gonna take those guys out And yeah, we we did have a SMT on higher time frame because NAS was giving us a in this same exact area we had the Nasdaq give us a higher high where US 500 gave us a lower low and US 30 gave us the same lower low here. So that would be an SMT or that you're right. See, not much happening here either, other than the fact that we traded into this gap, back into that, breaker block there, same move, 929, 928. Traded down lower into this 1 hour fair value gap here, tanked off lower, sitting sideways. So not much to expect. So that's how you would be looking, how different traders would be looking at different setups. And not one trader is going to look at the market and look at the market the same way. You might be coming in looking for longs, and somebody else might be coming in looking for shorts. And by the end of the trading day or that trading session, both of those scenarios would have panned out, and both of those traders could have been profitable. So when you are in these markets, don't sit there and focus on the social media. Don't be looking at other traders. Don't look at what they do. Come in, look at your own thing. You're coming to work, you're sitting down. Don't be focusing on what other people are seeing in the market because you are going to get influenced by that. And that's going to be something that's going to be in the back of your mind. And if you wanted to go long and somebody else is saying no, they are looking at shorts, that is going to get you doubting to go long. And then your model is going to present itself. And then you're going to be hesitant to take that model and you are going to miss your trade. So when you're coming into this, sit down. It's your time to the marketplace. And you are not, again, you're going into this alone. You're not sitting there with hearing about what other people say for that specific session's bias or whatever. You come into this, you analyze, and you come to your own conclusion. And if you come into this and you are not sure where the market is gonna trade to, and you want to find yourself looking to go maybe look at one of the live streams of one of the other traders like Tanya or Pat, because you want to get some type of a directional bias from those guys, then just stay out of the market. Don't go in there. Don't take a trade because you don't have a directional bias. So just don't take a trade then. Wait until you see something clear up. Wait for them to take one side and wait until it becomes clear. Once you have a one-sided directional bias, a clear target, then you can take a position off of that. Most of the time, if you're not sure or you are unable to form a clear directional bias, then it's going to be this exact same scenario of this morning. It's going to be a 50-50 market. You can clearly see that it had equal lows, equal highs above us. And we had to wait for one side to be cleared before we really got anything. So if you're going in, you're looking at Tanya, you're looking at Pat, then that is the number one sign that you should not be in there pushing any buttons. So you stay out, wait for it to clean up, wait for your model, and then you can look at taking a position if it presents itself. Nice equal lows, trade it into this move up. We had this order block here, trade it into that. Now lower, sitting around this consequent encroachment, trade it into that tank. You might be the type of trader, and I don't think anybody has ever thought of this model. Nobody that I am aware of. And this just it literally just popped into my mind right now. But you might be the type of trader that might be going into this market, and maybe you're trading fair value gaps, or maybe you're trading inversions, maybe you're trading breaker blocks, maybe you're trading order blocks. This is pretty much going to be applicable to any PD array. But you might actually be looking at mean thresholds of certain PD arrays, which could really be any PD array. You might be looking at mean thresholds or consequent encroachments of maybe fair value gaps, or mean thresholds of maybe order blocks, maybe mean thresholds of breaker blocks. And maybe that might be your niche that you might like to see price for as per example, this inversion over here. You might want to see price trade into this consequent encroachment of this inversion, and you might be looking to take an entry at the rejection of that and trade off lower. That might be something that you might be looking at, and that could be your model. And that again, just comes into, you got to go and you have to be creative with this stuff. Go in and find what makes sense to you and what resonates with you, and take that and make your model. That's how you got to do it. So that might be your model. You might be looking at price to trade the consequent encroachment, reject that consequent encroachment of, let's say, inversion, and that's your trade right there. Took that trade, it offered a hefty 60%, which is a lot. And the stop for this one, since it's a balanced price range anyway, you could be looking at taking, look at that fair gap up there. So 26% to make 60%. It's not bad. That's a really good trade. So that is gonna conclude it for this one. I hope that you guys have found some insight from this one and taken some notes. Some important things were said in this stream, and I think this is a really nice uh, scenario that you could take home and that could be applicable. So we are still in at 950, 1010 macro here. Started to clean up. We had this balanced price range. Really messy to get an entry at that anyways. If I was looking to get an entry at this, I would have liked to see price trade through this, come back to it, have it be a nice clean move, and reject, go lower. This would be a type C setup in my books if I was looking at that. So hopefully you have found this one insightful, and hopefully you enjoy your weekend. Until we speak again, be safe.